Welcome to the Facts versus Feelings podcast. I'm your host, Ryan Detrick, and I'm joined by my co-host, Sonu Varghese.
Cutting through the noise in 30 minutes each week with Ryan Detrick, Chief Market Strategist, and Sonu Varghese, VP Global Macro Strategist. Taking out the boring and helping investors focus on what really matters. A quick note before we start the show. Investment advisory services offered through CWM LLC, an SEC registered investment advisor. Carson Partners, a division of CWM LLC, is a nationwide partnership of advisors.
It is almost the election. So Sonu, today's podcast, we had Libby Cantrill over at PIMCO join us. We just recorded it. My head's still spinning. Libby sure knows her stuff. How excited? How good was that?
That was great, especially seeing you in glasses and a hat because you're celebrating.
Don't give it away. Don't give it away.
Yeah. Yes. So, no, look, I think the most important message out of that is irrespective of elections, a close election, but Congress also, control of Congress matters, but stay invested, right? I mean, don't let politics interfere with how you're investing your portfolios. I think that's the real message, which is not to say politics doesn't matter or anything like that, right? But markets look at these things very differently from how we may think it should react.
Oh, well, that's true. We've seen that throughout history. Markets don't always react the way you think they should. That's for sure. But we hear loud and clear from our Carson partners, from their clients, what's going on with the election. What do you think? What do you see out there? And we said, hey, there's nobody better, I don't think, in the world to have on than Libby Cantrill of PIMCO. And we reached out to her. And without further ado, this is episode 107 of Carson's Facts versus Feelings with Libby over at PIMCO. Enjoy. And we are back with episode 107 of Carson's Facts versus Feelings. Ryan and Sonu here. Sonu, we have maybe the busiest person right now on Wall Street / Washington, so we're going to just get right to it.
Except for the presidential candidates themselves.
I'm saying she's busier. I don't buy it. I'm saying she's busier than the presidential candidate. I'm going on record here. I believe we have Libby Cantrill of PIMCO. Libby, I'll let you talk in 1 second with your official title, because we like titles around here. But you are the first four-time offenders, I'm going to say. You've been on this podcast 4 times. No one has come back 4 times. So I don't know what's wrong with you, but thank you for being here.
Guys, it's such an honor. I'm very happy to be here with you. So thank you.
Yeah. And a title and a little bit about what you do to help people every day, Libby.
Yeah. So I said my official title, I'm a managing director and head of U.S. public policy at PIMCO, the large fixed income manager, and I sort of wear 2 hats at the firm. One is to coordinate all policymaker engagement on behalf of the firm. So when we go down to Washington and we talk to Treasury or FHFA or other folks, sort of policymakers, I'm the one who leads all that engagement. And then the second part of my job, which is, clearly the more busy part of my job this cycle, or I would say this year, is just trying to analyze political and policy risk on behalf of, for our investment team and for our traders, and then also for our clients, of course. So it is, so some years are busier than others. I have to say this has probably been the busiest year. It has just been incredibly great and wonderful to see all of our clients, but very
So
busy.
One more kind of softball for me, and then we'll dive in. I do want you to know, Libby, today is my birthday, so I have to wear this. There you go. I have to ask one, and I can't ask like a legit question wearing this, but how busy have you been? Like, tell us a story or two. Up till 2 a.m, wake up at 3. I mean, like, how crazy has it been for you? I'm going to wear this just for this question. I got to do it. It's my birthday, so, and then we'll get a little more serious.
Well, happy birthday! I was going to say you're not a Libra, I guess. I'm
you know
a
what?
Libra.
Sorry for people on the podcast. I've got. What does it even say, guys?
Yeah.
It says, it's my birthday. I can't. What's it say? I'm wearing something goofy.
It says it's my birthday. Happy birthday to Ryan, which is supposedly the most bullish day of the year for stocks, too.
Historically, October 28th. Bullish. Yeah, but go to the YouTube channel. You'll see what I'm wearing.
Yeah, we're recording this on October 28th, which is Monday. And even though this episode will be released on October 30th.
Well, let's hope Yeah. So, Libby, how busy has it been?
It has been busy. I think what the challenge has been that I've been doing a lot of international travel, because understandably a lot of our foreign clients have been very interested in the election and possible implications for the dollar and for rates and what have you, which I know we'll talk about in just a moment. And so particularly this summer, when every day felt like a year in terms of a news cycle. So I was on a plane over to Asia when there was the failed assassination attempt of President Trump. That entire week, trying to meet with clients while then at night trying to sort of distill what was happening in the States. Of course, that was the period of time where there was also a lot of speculation that President Biden was going to drop out of the race. So that was one, I would say, 7 day stretch where I really hardly slept. but again, all for good. We love seeing our clients here at PIMCO, but it has definitely been a busy stretch.
Go ahead, Sonu.
That's great. So actually, I'll just roof off of that. Since you have been traveling, sometimes it's nice to be able to break the bubble of where we are here in America, right? So is this current situation more risky? I know you're more busy, obviously, but is it more in terms of risk? Are people thinking about it as more risky relative to, what came in 2020, 2016, maybe even 2012 and 2008, obviously? Was during the financial crisis, but you've been doing this a while. I'm curious how this compares to everything that came before.
I think that our view is that while there's a lot of attention and while I think there's a lot of folks on both the left and the right who are characterizing this election as sort of existential, if you will, I think our view is that there are actually some common themes that will result regardless of who is elected. So higher deficits. Tax reform will dominate next year regardless. Tariffs are likely going to stay high, if not go up. And then the Fed will remain independent kind of regardless of the rhetoric. So again, I think we believe that there are some maybe more similarities than differences from in terms of candidates. I think though, Sonu, why folks are so focused on this, particularly overseas, is that this is the closest election really since 2000. And so I think the fact that there really is no, of course, 2016 was, the results were a surprise to everybody, but in terms of our clients kind of gaming out likely outcomes, I think this has been quite difficult because it is just so close. And of course it will break one way or the other. So in terms of, again, I don't know, we view that every election is important, of course. But I don't know if we view this one as more important than usual. I just think it's just a question of how close it's been. So our clients have sort of felt more uncertain in terms of the outcomes than they usually do.
So, Libby, you write a weekly note. I know you do a lot of other things, but we get your weekly note. It just came out like 10 minutes ago. I want to read the last. I skimmed it, and it's awesome as always. I just want to read the last sentence. I thought you really encapsulated a lot here. We are mercifully coming to the end of what looks to be a very close race with similarly close races in Congress, which in particular is likely to have implications and function as a check on what the next president can and cannot do, regardless of who is sitting in the White House. That's a great summary of it. Just how close is it? And I mean, again, the question now, we are recording this October 28th. We're 8 days away from the election. Hopefully most people listen to this Wednesday or Thursday of this week. But, the polls show President Trump's a tad ahead, but there's different parts. I mean, what do you see? I mean, I'm reading your note. There are some sway there with President Trump. What are you seeing right now?
Yeah, I mean, this is just an incredibly close race. We've characterized this as a knife fight in a phone booth, effectively, just in terms of how close it is. President Trump has been improving in the polls. There's some early voting data that kind of marginally goes to his favor in terms of potential higher Republican turnout. But this is all very much within a margin of error. And not only is it within a margin of error, the race is basically within 1%, both at the national level and then also in the 7 key swing states. I'm not going to bore everybody with listing those 7 swing states. And for many folks, I'm sure if they're in a swing state, they absolutely know it. But Pennsylvania is likely the most important state. That is probably the tipping point state, if you will. It's going to, how goes Pennsylvania, so goes the White House. And there, to your question, President Trump's polling has improved, but it's still very much within a margin of error. He's leading Harris by about 30 bips right now, according to 538. So this is as close as you can get. Again, there may be some vibes in some of the recent polling that trends maybe a bit more towards Trump, but we can talk about the prediction markets, but I would say, fade the prediction markets a little bit. That's sort of a self-selected group who are kind of putting their finger on their thumb on the scale, if you will, not necessarily super informed folks. And I think there's maybe a little bit of wish casting as well. So, I would say again, maybe a little bit kind of maybe a bit more biased towards Trump, but ever so slightly. Basically, this is really a coin flip.
I noticed you linked to a Nate Silver piece, who I'm a big fan of as well. And I was reading his book, most recent book, and it's interesting. You brought up betting markets, prediction markets, and even for like things like the Super Bowl, when you have massive events like this, he talks about how there are more whales than sharks, and the arbitrageurs they don't have enough wherewithal to overcome what the whales do, and people are just betting for fun or whatever it is, right? Wish casting too, in this case, probably with respect to elections. But one thing, like on the topic of polls, I mean, obviously polls are wrong in 2016 and 2020, or they were kind of off, and maybe even in 2018 and 2022. One thing I'm surprised by, I'm curious your thoughts on this, is yes, it's a very tight race, but you have to, you're seeing everybody's poll come in around between 1% maybe. Like, you're not seeing even +3 or -3, whichever side, right? And you would think, like, normal distribution wise, you would see some outliers, but it seems like all the pollsters are coming out at like, oh, it's 1 to 2% or 0 to 1 even. I'm curious if you're surprised by that.
Yeah, so two things. So one is that there was pretty significant polling error, as you just point out, both in 2016 and in 2020, where pollsters underestimated former President Trump's support in both of those cases, particularly in 2020. Actually, 2016 got all of the attention, and of course the state polls were very off. But in terms of the national polls, they were more right than wrong. But in 2020, the national polls were also wrong. But 2012, actually, the opposite happened, where pollsters underestimated the support for President Obama. So this is something that and I talk about my note this today, just sort of reinforcing that polling error is symmetric, meaning while pollsters underestimated Trump's support, both in 2016 and 2020, they've also underestimated Democrat support. And the only reason I highlight that is I think that this election cycle, you could make the case that once again, they're getting it wrong for Trump. You could say that there's some, young men in particular that they probably aren't picking up in their likely voter kind of turnout models, if you will. But I think at the same time, there are lots of new, particularly female young voters for Harris that pollsters may not be capturing as well. So it's just something to kind of take. I think we should all just take polls with a grain of salt. Now, the second point, though, is excellent in that this is not like, there's just no way that all the pollsters are getting like the exact same, not even within the margin of error, within like a point. I mean, so they're obvious. I mean, my own view is they're probably doing something at the back end in terms of their turnout model to sort of adjust. Now, are they overcorrecting from 2020? Are they, obviously they have every incentive to get this is right. So it's not, I don't think they're manipulating anything. But it does seem quite odd that in this, pretty wide plethora of polling that you just sort of see there to be kind of all coalescing, again, not even within a margin of error, but within a point. So I do think I'm sort of skeptical. And I do think this is something the markets should just be prepared for, that we could see a systematic polling error that could go either way, right? It could go the way of Trump. And that means that we could also see all 7 or majority of 7 battleground states go one way to Trump, or, alternatively, we could see the opposite, and we could see them going for Harris. So this is why our clients are scratching their heads, because this thing really could, again, kind of break either way.
It's interesting how we talk about herding amongst, active managers, not PIMCO, but or not us.
We like to be contrarians.
Yes, we like. Yes, no, absolutely. But then it seems like there's herding amongst pollsters as well.
What I think is fascinating about this election, and I'll be honest, I'm not always into politics that much. I've said this before. I mean, of course, it's my job. I pay attention. But this one really feels like you really get to know some of the candidates, right? I mean, I wrote this down. I apologize, my phone kicked on when I did it, but just in the last week, you've got Walz on SmartList for over an hour. You've got Trump on Rogan for 3 hours. You got JD on Theo for 2 hours. I know Vice President Harris hadn't done as many long form interviews that I can find, at least, but it's interesting because you really get to know them. And there was a tweet. Here's where I'm going with this. There was a tweet that went viral. It said, "This seems like the first election where new media has fully flipped traditional media." I think that's true. I mean, I think it's true. I'd love your thoughts on that. Like, I think in 4 years, everybody's going to do a long form podcast. I'm not saying these debates don't matter, because they do. But who's to say in 4 years the debate isn't on Joe Rogan? I mean, that could be where we're headed. And I think it's really neat. I mean, what's your take on traditional media versus this new media that we have in a big way this year?
Yeah, I mean, I think that's such a great observation. And I do think, I mean, you guys look, everyone's just following your lead in terms of just the effectiveness of your podcast. They know how well it resonates with your clients. But I do think that, the podcast in particular, it just lends itself to getting to know the candidate, to really questioning the candidate in a more relaxed way. Kamala Harris did do, Call Me Daddy, the podcast. So, and that was a longer form as well, although she hasn't done as much media, which she's obviously been criticized for. But I do think you do get to know, folks. I mean, I would argue that maybe Tim Walz was selected as her running mate, because he had done so much of this type of kind of new media, versus some of the other folks who were in the running. So yeah, I think this could be a whole new approach. And you've seen with Harris in particular, one of the like her or hate her, or whatever your political views are, her rollout of her campaign was like pretty unimpeachable, honestly. And part of that was because of her use of social media, and just like the way that she was connecting with folks. And then those people were amplifying her message. And so that, I mean, again, some of that polling has certainly kind of stalled, but that momentum that she got right out of the gate, I think largely had to do with taking advantage of those new media channels, as you point out.
Yeah, we reached out to Harris and Trump. Neither one of them come on our podcast, so that's why we, it is.
But I'm here,
we
guys.
So, I know we tried. We tried.
You're the one that matters here.
Right.
On that, like, how much does Congress matter? Is this okay? I'll ask it a different way. Is this the first time you've seen Congress this close, this tight? Like, there's so much uncertainty. Like, even if one candidate, neither candidate is really favored, maybe Trump up with 0.3%, but Congress seems really close as well. Maybe not the Senate as much, but still.
Yeah, no, I mean, Congress is, and I do think so. I mean, just to maybe take a step back, I think Congress, even though the White House has sort of captured everyone's imagination, the composition of Congress matters just as much, honestly, if not more, in terms of some of the things that investors care about. New spending, tax policy, the creation of regulation, the destruction or scaling back of regulation, the confirmation of presidential nominees. All of this goes through the legislative body. So, in many ways, we always sort of direct our clients to saying, like, White House matters, but the composition of Congress matters just as much. And when I was talking about Congress, I mean both the House and the Senate. The House and the Senate, I think, to your question, they're starting out from a place where they're incredibly narrow majorities. And so I do think that's and just in terms of kind of modern history, relatively, new. If you go back to 2000, the Congress was actually quite closely split back then after that election. But I think what's just different about this cycle is that it is coming from a very narrow kind of majority. Republicans have a 4-seat majority in the House. Democrats have a 1-seat majority in the Senate. And you could see actually, each chamber flip potentially. I think the Senate definitely will flip to Republican control, but also by a very narrow margin. And the same thing, if we see Democrats take back the House, it might be by just a handful of seats. And that will have implications for kind of what can and cannot get done in 2025. But I do think this is pretty unique in that, again, we're talking about just very, very narrow majorities. And I think that's some ways reflective of just how calcified the electorate is, how polarized the electorate is, and how evenly split the electorate is. Gone are the days in many ways where you had a bunch of sort of swing House districts in particular, and you saw this big pendulum of 30, 40, 50 seat majorities kind of come and go. Now you're really talking again about kind of 5, 10, maybe 15 seats if either party has an excellent night.
So building on how tight it is, I forgot this, but 4 years ago, we didn't wake up the next day and it was clear cut, right? The AP, I believe, didn't call it right for President Biden until Saturday, right? So maybe we kind of knew it was coming, but it wasn't official until Saturday. How soon? I mean, I don't, you know where I'm going with this. When will we know? When will it be official this time? Do you think it'll be the next morning, or will it be several days to tally up all those votes?
Yeah, I mean, what we've been guiding our clients to is that this probably won't be election day, and more likely could be election week if it is very close. I mean, if what the polling suggests, and if the polling is correct, and there isn't some big systemic error one way or the other, and this all comes down to, say, Pennsylvania, for instance. Again, Pennsylvania is the most critical state. Kind of how goes Pennsylvania, so goes the White House. Pennsylvania took 4 days to count last cycle. And so Pennsylvania's wasn't called actually until that Saturday. And then the AP called the presidency quickly thereafter. So you could theoretically have to wait until the weekend after the election. I'm hoping that's not the case for everybody's sake. But I think we'll probably, like the last election, have a relatively good idea, maybe the evening after, so the 6th, maybe not until the 7th. But again, I think one thing just to keep in mind is there's nothing necessarily nefarious going on. Much of this is just predicated by how these 7 states count, particularly mail-in ballots. One of the reasons why we've seen these delays last cycle in particular back in 2020 is there was just a lot more kind of mail-in voting because, of course, it was during COVID. And to process those mail-in ballots, some states just take a long time. Pennsylvania and Wisconsin in particular don't allow for their election workers to start processing those ballots until election day. And that might just seem like, well, why would that take so long?
I didn't
But if
know
you
that.
think about opening the ballot, checking the voter information from the voter file to what's on the ballot,
Paper
checking
cuts.
the signature,
Paper cuts.
Exactly. Spilling some coffee. I don't know. But all this stuff does take a while. So again, I don't think there's anything nefarious. I think the market hopefully will have been prepared for this if this does take, days, if not, a day. But again, this is just something that we should, I describe it as sort of the slow wheels of democracy kind of grinding, but not necessarily, again, kind of going off the highway, if you will, to sort of extend that.
One more quick one for me, then jump in, Sonu. You mentioned Pennsylvania a few times. I'm from Ohio, live in Ohio. There was a time they said, so goes Ohio, goes the White House. Obviously, that didn't happen 4 years ago. What are the stats on Pennsylvania? Is it really true? Like the last 10 elections they've called it, or do you know off the top of your head? I mean, how legit is Pennsylvania here?
Well, so Pennsylvania, I mean, I think, just like Ohio, some of these states were not swing states before, and then they become swing states, and then vice versa. Like states like Ohio have dropped out of being a swing state. I'm originally from Colorado. Colorado used to be actually a red state and then a purple state, and now very much a blue state. So a lot of these, states have kind of changed as the demographics have changed. Pennsylvania, I would say, has been, a swing state over the last 3 cycles in particular. Or 4 cycles, you can go back to 2012. But before that, it was really a very consistently Democratic state. And that's probably because of sort of the union, the base there that had historically been Democratic. So, Trump won Pennsylvania in 2016, of course, Biden won in 2020. And then again, I think that whomever's in the White House will have won it this cycle.
Give us your secret, Libby's secret to watching election day
Oh boy.
Like obviously you're not waiting for like Pennsylvania to be called by AP because it could be like Saturday or Sunday. Hopefully not, but same thing. Arizona, Georgia, North Carolina, Wisconsin, all of that. But what are you going to be watching election day night to see, okay, which way may things be trending without waiting for the networks to start calling races?
Yeah, well, I'm actually going to be on Bloomberg for, I think, 2 hours on election night. So I will be, live commenting on the election results. But, I think, again, just with this, a lot of this will depend on the mail-in vote versus the in-person vote. So I think looking at that breakdown, and that will obviously be sort of state dependent. But there are some states historically that have reported much faster. Actually, Florida is super fast at reporting. Their, of course, polls close on the East Coast time. They also report very quickly. Some of that's actually ironically because of the 2000 brouhaha, where of course we all remember that where that had to go to the Supreme Court. So they made some very essential reforms. So I would just say if Florida, for instance, which used to be a swing state, now a pretty reliably Republican state, if Trump wins that by 10 points, then that could look like this could be kind of the beginning of a wave. North Carolina, they used to report more quickly. There's been some reforms that have maybe taken us back a little bit in terms of both the counting and the processing and the tabulating of votes. So North Carolina may not report that quickly, but North Carolina would be theoretically kind of the first swing state that could report the election results, and obviously that will be important. But there's certain counties, Allegheny County in Pennsylvania, the WOW counties in Wisconsin. They're just kind of Maricopa County in Arizona, obviously, which is going to be reporting a little bit later. So those are really probably where the race for the White House will be decided in many ways. Just given, again, the importance of those swing states and the importance of, this House is going to come down to probably fewer than 5% of voters in those swing states. So again, but if this is a blowout in Florida, for instance, then, you might be thinking, I would see that probably you'd see futures do pretty well. I would think. We'll see.
Interesting. We've got about 10 minutes to go. I want to be respectful of your time. And Libby, we really appreciate you joining us for the fourth time. To remind everyone, if you want to hear the latest from us, don't forget to subscribe to our podcast. You can also leave a review. We love your feedback. So, Libby, I've asked this the last one or two times you've been on. We'll have a little more fun with this one and, one or two more questions. Your son did student council. I believe he won. What's the latest with the House? Okay. There's the update. Okay, what's the latest? This is a sore subject. We can talk about politics all day, but I seem to hit a sore subject.
Son, if you remember, my son had been a House rep.
Okay. Mm-hmm.
And then he had the opportunity to run for a secretary position. But he felt like, the secretary just does all the work and gets no glory, and that he may not actually he may not broaden his, the affection among his constituents. So he ran again for House rep, which was good. And he had, well liked. And then this year, he decided not to run for anything because he had some friends who were running for the House rep position, and he didn't want to necessarily crowd them out. But he will have the opportunity to run for the president of his school next year. So I'm hoping that this sort of pause from political life has, he's 13 now. So hopefully it's just, it's just a pause, and it's not a full, it's not permanent, but we'll see.
Well, that's a lesson in there for timing things perfectly with respect to running for office, I guess.
Exactly. One thing in the beginning we talked about, I mean, you can take this however you want, but gold is at all-time highs. U.S. dollar's been strong. Yields have been strong lately. DTJ, President Trump's stock is up like 20% the day we're recording this on October 28th. What are some of these signals we're seeing when you look out, in your magic crystal ball with what the action we've seen lately?
Yeah, I think what you've seen is sort of the reemergence of this Trump trade, if you will. I mean, in our world, you've seen that in terms of the sort of the steepness of the yield curve and kind of the yield curve normalizing a little bit, particularly at the long end, as we believe that investors are, pricing in maybe increased chances of more inflation from potential increased tariffs under Trump, and then also higher deficits. One thing, though, however, that we're telling our clients is that, regardless of who wins, deficits will be the biggest loser. And so in some ways, what you've seen in the yield curve as markets kind of price in a potential Trump win, we think should be priced in regardless. So whether it's Trump or Harris. And the reason, and you all understand this, but just as a reminder, we're looking at deficits in sort of the 6.5-7% range. The CBO has estimated over the next 10 years, kind of an average deficit around 6%. We think that actually could be lowballing the real deficit figure. That's because the CBO, they assume kind of current law, not current policy. Not to get totally in the weeds here, but current law assumes the expiration of the Trump individual tax cuts. And so we think it's sort of underestimating actually what deficits could be, assuming that those Trump tax cuts do get extended, at least mostly, if not all of them. And so as a result, you could be looking at 7.5%, 8% deficits over the next 10 years. So we think that's sort of a starting point, right? That's before any new policies, that's before any new spending on Ukraine or defense spending or childcare spending or any additional tax cuts, no taxes on tips or Social Security, all the things that Trump has talked about. So we think deficits will be higher again, regardless of who wins. So we think, and this is public information, but we have a curve steepener on and across, most of our portfolios, just with that expectation that yield curves, are likely to continue to normalize. But again, markets are sort of pricing that in for Trump, but we think that markets should be pricing that in for Harris as well, because the dynamic's not going to change very much if she gets elected.
Sonu, to you in 1 second, I just want to do a disclaimer. I mentioned, DJT stock. That's not a recommendation, just pointing out it has been strong lately. Sonu, we probably have time for like you one more, me one more, and that's it. We have to let Libby go do her day job. We got to be respectful here.
Now, try to connect, what you just mentioned, all the policy stuff. And there's some vagueness around that, especially relative to even, are we going to have income taxes? But set that aside, right? And markets next year, given tax negotiations, usually we talk about this with clients too, that split Congresses tend to be good for markets. There's checks and balances. But next year, I'm trying to play devil's advocate. If we have a split Congress, is there a risk that we face a fiscal cliff and the tax cuts don't get, extended?
Yeah, I think that's an excellent point. And yes, I do. I think to your point that, investors are in many ways more comfortable with divided government because there is sort of these checks and balances. And if you look, I'm sure you've all done this analysis too, but if you look at the S&P performance since 1933, the S&P has actually done the best under sort of compositions of divided government, what have you. However, given we do have this big inflection point, these individual Trump tax cuts all expire at the end of 2025. It's about $4.5 trillion over 10 years. Now, I think the expectation and the base case in our view is that regardless of who's in the White House or composition of Congress, those will either get, again, mostly extended or fully extended. Raising taxes is just not politically very popular. But as you say, there is an increased risk that you could go over that fiscal cliff, and that risk definitely increases as with the kind of the divided Congress. I mean, one preview of this, if you believe that, is that there was a bipartisan tax bill easily passed the House to extend some low-hanging fruit, right? The R&D tax credit, expansion of the child tax credit. It was a temporary bill, would have only extended these things for 2 years, but it was like the lowest hanging fruit and super popular things, right? Passed the House by a huge margin and then got stuck in the Senate. And so you do think, okay, if they can't even pass, then of course we've had divided government, we've had a Democratic Senate and a Republican House over the last 2 years. So if you feel like they can't pass that, then you do worry about this huge tax bill where I do think lots of other things will be on the table. There'll be kind of carried interest. They'll be talking about corporate taxes going back up. They'll be talking about capital gains. So all of that stuff is going to be pretty knotty and hard for Congress to deal with. I would say lastly, though, more likely. So if we don't see a full reform, in terms of the package getting done, what I think versus just going over the cliff is you could just see a full 1-year extension. So you could sort of see this idea of like rolling extensions. I think that's more likely than going over the cliff.
The midterms.
Which Congress, very good at. But I do think that's more likely. But I do think to your point, it's that the risk of going over that cliff is certainly higher if we have divided Congress than if we have unified government.
Very, very interesting there. Libby, we really appreciate you taking time with us. We reached out a couple months ago to Ian, and thanks, Ian, for organizing all this. And, we know you're busy, so thank you so much. Maybe we'll kind of end with this. When this is done, maybe it's a couple of days after the election. Will you have a vacation planned? Are you just going to take the entire month off of December? I mean, what are you going to do to kind of decompress? Because obviously you are pulled so many ways, and that's awesome. By the way, I mean, hey, Libby just said it, right? Election night, she's on Bloomberg, so I think that's worth checking out.
I imagine you'll be back before the debt ceiling has to be.
Yeah, well, yeah. Do you get any break? Well, tell us what you plan. What you're planning here.
I wish.
Okay.
Go talk to my bosses. No, I think one thing about my job, which is like the great thing about it, for all my complaining about how busy I've been, is that it just changes every single year. So the election cycle, obviously, we're just focused on talking to clients and figure out what's going to happen, kind of handicapping the odds. But then in a new administration, then it sort of goes to actually sort of pivot to substance, right? And you have to meet a whole new group of personnel. In this case, it'll be a new administration, regardless of who's elected. So meeting new folks, and again, then we'll talk about taxes and debt ceiling and all of that stuff. I will say though, probably the last 2 weeks of December and hopefully the first week of January, it will be a little bit quieter. So I am hoping to take some time off. I'm not sure what I'm going to do. Maybe sleep. I have no idea, but it'll be
watch TV, relax.
Yes, exactly.
I'll just give you the floor, Libby. Any final comments about anything at all you want to talk about and wind down today's facts versus feelings?
I would just say though, like for all, again, for what, sort of what I said in the beginning, for all of the noise around this, from just purely from an investor's perspective, if you just think about what is likely, regardless of who wins, it is increased deficits, tariffs will remain high, tax reform is going to dominate Washington next year. And again, the Fed, I do think, will remain independent. I think this is an important, I receive that question a lot from our foreign clients, just about concerns that, especially if President Trump is reelected, whether he would be able to fire Powell. He won't be able to. He can't put himself in the Fed. We're not concerned about that. But realistically, he won't be able to affect personnel until the first vacancy, which isn't until early 2026. So for all intents and purposes, the Fed that Joe Biden is navigating right now in 2024 will be the same Fed that President Trump or President Harris has in 2025. So again, I think this is where we've been telling clients, stay invested, as I'm sure you have been. In our view, kind of cash out of cash, get into active fixed income, because we do feel like there are lots of opportunities in bonds right now. But just to kind of, just pay attention to the signal and kind of fade the noise, if you will.
That's
Love
fantastic.
it.
Thank you.
Well, this was so good. Thank you so much. It was episode 107 of Carson's Facts versus Feelings, talking about the election with Libby Cantrill of PIMCO. Libby, thank you so much.
Thank you.
Hopefully
Happy birthday.
Thank you. 6 months, we get to do it again. Let's talk in 6 months, see where we are.
Welcome to 46.
Oh, yes. I made it. Officially made it. All right, everybody. With that, we'll be back next week. Take care. Thank you. Goodbye.
Thanks, guys.
Information provided on Facts versus Feelings with Sonu Varghese and Ryan Detrick are for general information only and are not intended to provide specific advice or recommendations for any individual. The statements and opinions of show guests may not be reflective of CWM LLC or its affiliates. Past performance is no guarantee of future results. All indices are unmanaged and may not be invested in directly. Investing involves risk, including possible loss of principal. No strategy assures success or protects against loss. To determine what may be appropriate for you, consult with your attorney, accountant, financial or tax advisor prior to investing. Guests on Facts versus Feelings are not affiliated with CWM LLC.